Hello, welcome everybody. First webinar of 2021. We are here to talk about claims customer experience in 2021 on the back of a wild year for many reasons, but one of the biggest was this push for a customer experience or CX focus, digitization, especially in claims, because we didn't have a choice and then the train left the station. So this year is one that I think the industry will really break away from this reputation of being slow and steady. And maybe that's a nice way of putting it. For customers, it was sort of, you just have to deal with it. It's your insurance company and they're not going to be like everything else you deal with. Things are different and becoming more and more different. We are catching up and maybe even pulling ahead in some spaces as digital adoption continues to gather pace. But with that rapid transformation comes huge responsibility, the need to rise above not just customer expectations right now, but thinking about where they're going, because the gap between right now and where they're going is compressing. So we don't have time to just wait till the next demand pushes us to do something. I'm Bryan Falchuk. I'm your host for this webinar from Reuters Events, and I'm the managing partner of Insurance Evolution Partners and the author of The Future of Insurance: From Disruption to Evolution. I'm getting disrupted trying to say the title of my book. I'm joined today by two esteemed colleagues. We have Doug Kratzer, who is the Vice President of Claims at Hanover Insurance Group, and Elisa Logan, who is VP of Growth for VPay. We're going to dig into some thoughts from each of them before we get rolling. But I do want to ask you, use the Q&A function. You can ask a question at any point throughout this conversation. We'll have lots of time for great chances to answer your questions, to dig into the things that you are most curious about. So make sure you are popping those questions into the Q&A button at the bottom of your screen here in Zoom. You don't have to wait until the introductory thoughts are done. Something occurs to you, pop it in there. And for everyone who's registered today, and that includes people who are maybe watching this on replay because you couldn't join us live, you will be getting over email a notification about a white paper that's coming out from Reuters Events in conjunction with VPay, talking about a lot of the things that we're hitting on today and where payments in particular will be heading in the year that lies ahead. So with that, thank you to Doug and Elisa for joining us. Doug, do you want to open up with some thoughts for us on this subject of what's going to hit us from a customer experience standpoint in 2021 in claims?
Sure. Thanks, Bryan. As a claims team, we do play a critical role in helping our customers when they need us most. It starts with empowering employees with the skills, resources, and tools to enable them to understand their customers' unique needs and proactively guide them through the claim process. So we really need to be agile so that experience can evolve as our world and our customers and our industry changes. So when I was thinking about this discussion, I wanted to focus on how can we leverage technology to do what I think are the three things. One, personalize that experience for the customer, simplify the process for the customer, and then maximize our efforts at the adjusting desk and managing that process so that we can give the right customer experience. So the question is, how can we leverage technology to personalize the customer experience? The key word in that sentence really is personal. I define personal as the perception that a customer feels after they've had their interaction with us, and do they feel connected to the carrier and to the process. And it's not really one size that fits all. And I do believe a process can generate a feeling of connectedness. And the key is communication is the key to that connectedness. And so what are the appropriate communication channels for each customer? In this new world, will customers actually engage us in a video conference? Do they prefer texting? Does a phone system recognize them, and does it have a personal touch to it? Are we personalizing our communications with our customer? We need to show those customers that they aren't just a claim number. And the key here is customer preference. Some customers in some claim types may require and need different touch points. So what makes this process as easy as possible for those specific customers and those types of claims is important. We'll be able to support our customers based on their needs and expectations. So when I think about, there has to be a different approach for a high touch claim, and there has to be a very different approach for a low touch claim. and knowing your customer and identifying those specific claim types at the first notice of loss can help claims teams identify what approach would best satisfy that customer. It's also important that the claims team focus on empathy. Empathy drives trust and confidence in the process. And how do we make an interaction with a customer empathetic? You know, adjusters have to deliver a customer experience while managing claim handling tasks. This is an emotional process for the customer, and so the adjuster really needs to remember that. So they have to employ techniques like active listening. They have to recognize the vast diversity among their customer needs and the diversity among their customers. So we have to train our staff to tailor their words and responses or choose those right tools and manage that process for each specific individual claim and customer. Helping adjusters actually understand the different communication styles and how to identify a customer's own communication style will allow them to flex their own style to have meaningful interactions. The next focus was on how can we simplify the claim process. You know, the process needs to focus on the customer. When a process enables a customer to easily accomplish what they need to without burdensome redundancy and unnecessary steps, the customer can feel reassured that they are what is important. The focus is on them and their needs. The simplicity of a claim process can create that vital emotional connection between the customer and the carrier. You know, we need to find opportunities to streamline the claim process to remove redundancies or cumbersome steps so we can easily make the customer whole again. I think you do that by focusing on modern technology, right? To get that real wow factor from the customer. I think there's a general perception amongst our customers that some of these processes that we manage can be a little bit painful for them, right? And so an easy process will provide peace of mind, it'll build trust, and it demonstrates respect. They should feel the process is working for them and meeting their needs and not just the carrier's needs. And then finally, how can we maximize our efforts at the adjusting desk, right? So how do you most effectively generate an emotional connection? What tools does your adjusting workforce need to use to optimize their time so they can actually be freed up to drive better customer satisfaction? But, you know, it seems counterintuitive, but automation is often the key to building that personalized, tailored approach that allows for emotional connection. Learning as much as you can about your customer at the time of purchase drives the personalization and emotional connection. You know, an example is leveraging that pre-filled customer information so the adjuster actually knows who they're talking to before they actually get on the phone. If you're a customer and you call your insurance carrier the first time and you have to be asked about 50 questions, you may get that impression that your company doesn't really know you.
Yeah.
Using data and tools to anticipate their preferences and help guide them through the process help generates an emotional connection. The first conversation is powerful in creating that personal connection, and this is where empathy training and outside-in thinking comes into play. We can deliver a more personalized experience that brings the focus back to the most important issue at hand, which is resolving the customer needs. You know, when we evaluate our processes, we really need to eliminate that non-value added work, so that from the customer perspective, it allows us to focus on the elements and touch points that are most meaningful to them. Looking for the right opportunities to automate manual work and leverage data to streamline the gathering of that customer data enables a more personal experience. Adjusters only have so much time in the day, and they can't and they shouldn't really focus the same amount of time on each claim, right? So we can actually leverage predictive analytics to help identify the complexity of a claim and allow for a more consistent application of the claim process. Tools to augment decisions for adjusters can speed up that process and identify key intersection points in the process that enables an adjuster to anticipate customer needs or to avoid a bad service experience. So that, you know, removing of the non-value added work, it enables adjusters to easily identify and focus on the claims that most need their attention, allowing for meaningful customer touch points, deeper connections, and a better customer experience. You know, I'm looking forward in the Q&A, Bryan, to hear some other people's perspective and maybe get some examples from the group on some of these issues. So,
yeah, no, it's great points, Doug. You hit on something that stood out to me in particular around, you said the high versus low touch, and looking at the type of claim and the situation and giving the right kind of response. And of course, going back to your point on empathy, what you define on the carrier side as high touch or low touch, a claim that needs high or low touch may not equal what the customer's expectation is, because it could be their first claim ever. So it's catastrophic, even if it isn't, by our standards. So when you talk about empathy and having your ears open, maybe taking out a lot of that manual work that kind of numbs you to a lot of the human side of the claim, because you're just so tied up in process, you can open up and recognize, what did the customer actually need from me here, aside from the standard I would normally give anybody, because that person's situation is unique to them. So I like those pieces coming together as you think about that's a human on the other side going through something.
Right.
Elisa, talk to us a bit about your perspective on this, and having been both on the claim side, running claims, but also on the recipient side, someone who is hit by
Sure.
a driver at another company, the payment is really critical. It's the crux of what the claim is about ultimately. So I'm very curious about your take on this.
Sure. I mean, I think building off of what Doug said, there are a lot of opportunities in the claim journey to impact how that customer gets treated, right? From the first notification of loss through the payment. And I think there have been so many efforts lately around innovation in the claim journey that it can be kind of overwhelming. Where do you start? And I think the best advice I've heard is choose those solutions where you can get quick wins that deliver a positive impact on the customer experience. And when you think about that claim process for the customer, that last step, the payment, is the experience that they will remember most. So since COVID, people have been rethinking their behaviors across every aspect of their lives. It's changed the way we go to work, the way we go to school. It's even impacted the way we see doctors. And overnight, digital solutions went from nice to have to must have. And I think we probably all agree that we don't see that changing anytime soon. So consumers moved from wanting ways of paying and being paid that made them feel safe. People now want predictability and assurance, and that's especially true when it comes to their money. They want it quickly, and they want to have access to it anytime and anywhere. And when it comes to claim payments, digitizing is essential to making that a reality, especially when you consider what we've read, and you may know better than me, but about 50% of all claim payments being paid right now are being paid by check. And checks just seem out of step with the payment trends that we've seen take over the consumer markets in the last few years. You have digital wallets, you have mobile banking, and now you have mobile apps for moving money from consumer to consumer. And in the past, I think insurers have relied heavily on ACH and check. And while that may have worked before, it doesn't seem to be working moving forward. And I think in big part, that's because you're seeing a lot of digital native generations, the millennials and the Gen Zs, who are stepping into the forefront, and they have extremely high digital expectations across the board. And more consumers are willing to try new brands to get what they need. They'll try something if it's going to give them what they need. And when it comes to claim payments, those needs are really simple. Give them options, make it easy, and make it fast. In fact, we've seen some studies on customer experience that suggest that the #1 driver of satisfaction is how fast a policyholder gets paid. So there's a lot of demand for innovation dollars, right? So how do you prioritize? Well, building on that earlier suggestion of following where the solution will provide the greatest impact on the customer's experience, I would add to that while also delivering bottom line results, because let's face it, that's part of the game too, right? And that's where digitizing claims and outsourcing can help. I'm going to say something now that hopefully you all agree with. Payments are table stakes. Every insurer pays. And while you could build it yourself, there are very capable fintech and financial institution partners that can accelerate the process, delivering deep integration into claim systems, integrating into existing adjuster workflows while taking the financial, regulatory, and compliance burden off of the insurer. So digitization through a payment platform can help address a lot of the challenges that many of you face when it comes to payments by providing both innovative B2B and B2C solutions. These solutions can allow you to pay policyholder claims more conveniently and faster. Many payment vendors offer payment options that include e-payments like push to debit along with ACH and check. Push to debit payments go directly into the policyholder's bank account within minutes, and the funds are available immediately. These payments can be delivered through mobile solutions where payment approval, including multi-party approval, can happen. And the mobile solutions can be white labeled and give policyholders the choice in payment type that they want and the convenience that they're looking for, all within your brand. And for B2B payments, they can offer service provider or vendor payments electronically with offerings like virtual cards in addition to ACH and check that can provide revenue sharing benefits. Outsourcing also allows insurers to tap into proven methods to contain costs, address cost reduction, and streamline administrative functions. The right payment solution can help you convert more of your payments to e-payments, like 45 to 60% plus adoption, eliminating check print mail costs. Paying claims faster can also help address other areas like loss costs, cutting down on rental car days. And the right payment platform also provides a single system of record where all financial, claim, and delivery data is securely stored and available in real time, streamlining those administrative functions. Finally, payment platforms like VPays are agile and adaptable. They don't require system rewrites or heavy technology investments to get them up and running, and implementation can happen in weeks, not months. Financial transactions are changing quicker today than they ever have. By outsourcing, the burden of keeping up with the pace of change is off of the insurer, and you can rely on your fintech partner to introduce a payment technology when it makes sense for you, your business. One example of this is tied to what happened last year. We were able to address a growing need in the workers' comp market for electronic payments. Through the use of our payment technology, we were able to quickly mobilize workers' comp claimant payments to e-payments. So how did we do it? We built off of our mobile expedited payment platform that's designed for B2C payments and introduced mobile expedited payments for workers' comp. The solution allows claimants to overcome traditional barriers to electronic adoption by permitting injured employees to accept secure digital payments through a third party. This removed the barrier of the injured worker needing to share sensitive banking information with the insurer, which they were hesitant to do. And the solution allows for electronic payments to be made to claimants who were unbanked as well. The results have been really encouraging. Our clients have seen an 80% conversion rate to e-payments in that workers' comp claimant segment. So, and this was all done in months because of the platform's adaptability. So I think there's an opportunity when you start thinking about claim payments. It is the last step on the journey. It often, I know, is the step that people have thought, well, why put money, time, or effort there? But the reality is that you can digitize and outsource fairly quickly and kind of capitalize on one of those quick wins in the claim process that delivers to your customers the experience that they want, which is convenience, options, and getting their funds quickly. So
it's great. And this point about options, that's something that really stood out to me. I had a question all ready to go on that, but someone else had a question from the audience, so I don't even need to ask mine. Thank you for that. And from both of you, great opening thoughts that clearly sparked a lot of thoughts from our attendees because we have questions pouring in. We're not going to get to all of them, but we're going to get to a lot of them. So if something occurs to you, please don't hesitate. Do put it in the chat, in the Q&A specifically, and we'll dig into them. And with that, off this notion of options, let me find the question in here. It's from an anonymous attendee, so they wanted the option of not sharing their name, which is fine. But they bring up a really good point, and it's something I had seen from my experience in the communications and SureTech side, giving people digital communication options, that not everybody wants a digital option or digital option A versus B versus C. And Doug, I think maybe hitting on the point that we discussed coming out of your talk around what the customer's sense of the right level of touch and how they want to interact may be different from what you as a claim handler or you as an organization may have prescribed for their situation. So how do we figure out, I should just read the question, but it's basically not everyone wants rapid digitization of communication versus personal human to human communication. I will say they're not mutually exclusive. We presume digital means zero human, and they don't have to be, but the question goes on to say, how do you figure out who wants what? Are there demographics? Are there groups that may lean more one way than the other? Are there surprises to be found in our presumptions about those groups? I know I've seen that. So I'm wondering, Elisa, you probably have real experience from the actual payment processing and how that plays out from demographics. And Doug, you're seeing it in the claims themselves. Doug, maybe you can kick us off, and at the coalface, how do you see demographics and preferences playing out in what customers are raising their hands for what they want?
Yeah, no, that's a good question. I was going to answer when you asked, like, how do you know who or which group wants what, right? But I think that's the agility aspect of we have to have multiple channels so that we can actually meet every customer's needs, right? And even within those channels, if they want to change and opt out, they need to have that option, right? And so it's that balance. We have self-service options. We actually have, we teach people to, when they get them on the phone, if they choose the voice to voice, that we ask them, right? I mean, it seems kind of simple, but you have to ask them what their expectations are. You have to be able to relate to them personally to figure out what they really need. And when you talked earlier about or maybe I read in one of the process is highly intensive at the adjuster level to have to do a bunch of tasks, right? And if they don't have time to actually have a personal connection to ask communication, how often, what type, do you want text? Do you want a letter? Do you, I think it's, I think there are preferences within demographics, but I think it's unique to each person. I think it's unique to each claim. And so the more flexible and the more agile we are with providing those different options is going to be the answer.
Yeah, I think that's a great point, is you're not presuming who wants what, and you're not forcing everyone into one path or another. And you may be surprised, and those trends may change. I mean, let's not forget, a lot of people who we never would have thought were doing things like Zoom. Now suddenly it's a part of everything they do, regardless of age and demographics and socioeconomic status, et cetera. Elisa, what are you seeing on the payment side? Because, when you talk about that workers' comp example, that's a population that maybe people presumed would or wouldn't do something. And then 80%, I think you said, conversion to digital payment. Like, clearly someone was missing what could have happened if we just offered the option. So what are you seeing for uptake and variant by group?
It's interesting because I think the one thing we're seeing is that obviously the younger generations are more digital savvy, and so they will always opt for, the digital payment if they can get it. But I think that, like Doug said, it's not a one size fits all deal. And what we're finding is, a big part of what we do in our business is we have a call center, a support center for each of our insurers, and each one of them has their own their own 800 number. And so any payee can call in and change their preference, ask us about what's going on, and decide what the right payment method for them is. So you have to allow for that in the process. And we've seen actually that I think it's more by what people are used to. With the workers' comp example, it was really the barrier of providing sensitive banking information to the insurer. For some reason, there was a hesitancy to do that. And so what we did by coming in as this like third party that could provide them with secure payments, we just eliminated the need for them to provide that information to the insurer. That's probably not the same as it would be if this was your auto insurer and you were in an accident, or if this was the person insuring your home and you needed to file a claim. So I think, as Doug said, it's not a one size fits all.
Yeah. But an easy presumption in that case would be, oh, they just want checks. Anytime we offer them anything but a check, they balk at it. And so you swear them off of another solution because you never actually dug into why they kept opting into a check.
Right. Right.
So having those options, you might discover something surprising. We have another question that hits on a couple of other keywords, buzzwords that float around the industry that are gaining steam right now. Is what role do you think machine learning and modeling, data analytics could have in the claims adjudication process, and maybe with an eye to finding those paths of flexibility or the right response to what that person in that situation might be looking for? Doug, is that something that you guys have explored at all or played around with and seen anything on?
Yeah, that's a big topic, huh? Right. Yeah, we've we have, some of our vendors that we use. We have predictive. I always come back to the predictive analytics or a triage model, but the easiest example for me is in the appraisal world, right? The using analytics to identify the best appraisal channel for the customer, so that when you're providing that service and you're having that dialogue and getting them back, that you make the best recommendation for them, because they ultimately choose. We can't steer them, obviously, but that is the total loss process. And I think of you, Elisa, with payments and the total loss process. That's really, in the auto world, that's like one of the biggest places that we can have a hiccup from service, right? Is it a total loss? Isn't it a total loss? What's the value? How are we going to process this paperwork? How are we going to ultimately get you the funds? Because we're trying to make the process as fast as we can, but you need the money to replace the vehicle, and checks and mail are slow. And so, we're doing a bit in the predictive analytics. We're just trying to think of another couple examples. We are, a lot of people are using bots to automate the process and simplify it, right? Natural language processing. There are examples where we can actually streamline that process and allow that bot or that to do the actual manual work to get the solution to the adjuster quicker, which is augmenting that decision so that they can actually, they're armed with more information, they'll get trust from the customer, they'll be more confident, and they can get it done a lot faster. And we don't have to go through all that eliciting information from them to be able to make those decisions. So I think that's some examples.
Yeah. I think there's still a spectrum and it's still early, even while those things are here. So those are good real world examples of how you can start to change the handling process. What about on payments? Is it as simple as just they chose this payment was made, job done? Or is there more insight and analytics, and is there a way to kind of steward people to the smoothest path for their situation?
Yeah, that's a good question. Mostly, I think where we look at it, there aren't a lot of, I would say, insights and analytics around that we would necessarily use around payment options. But we do focus obviously heavily on keeping up with the trends, which, as you know, are changing faster than they ever have. So that creates a whole experience unto itself. One thing we've seen that's interesting is, like, how do you marry the payment trends that people have in their day-to-day lives into the business models that many of these insurers have? So, people have digital wallets, and they say to us, well, why aren't you using digital wallets? Well, because if you have a claim that's over $30,000 or $50,000, we can't get the money to a digital wallet, it doesn't accept it, right? So you've got the strictures that sit around the different payment types. And we look at how do we take kind of what we call the swim lanes, the needs that each of our insurance, our payers, our insurers, our carriers have. How do we build payment solutions that help them maximize what they can do within those swim lanes, you know, for whether they're doing, it's around flood insurance, whether it's homeowners, whether it's auto, whether it's workers' comp, what are the different needs they have? How do we look at the payment solutions that are available and then create platforms that help deliver payment options within that people have a choice? So.
No, that's it. So that kind of sparks actually, I think, a bit of the next question is swim lanes from a product standpoint, actually. This person asks, is there a business line, auto, home, liability, et cetera, that's lagging in CX innovation? And is there a way to improve this? So we're calling out some of those business lines and calling them out on the mat, but is the adoption stronger in some places than others? You know, I think we presume a lot of things happen only in personal lines, and commercial will be a while till that happens. But Elisa, you mentioned explicitly ways to help on the commercial side and on the vendor side as well. So are there still pockets where it's sort of, there isn't a lot of digitization, they're still behind, it's heavily manual? Elisa, maybe we'll start back up with you on this one.
Yeah, I think, you know, since when was the lockdown? March of 2020, right? That the manual processes have radically changed for many of the insurers, just out of need, right? And now it's a matter of refining it to actually make it something that is more sustainable over time. But I don't necessarily see that there are any holdouts. I think it's more about as people get used to these new ways of going to business, because, you know, for many insurers, they're used to having checks coming from here and, you know, their e-payments or whatever, e-checks or whatever kind of payment options they're offering coming from here and ACH coming from there. So when you look at changing that, it's about how do you get used to that system, and then how do you kind of look up and take a breath once you've gotten that done and say, wow, these are some other places that we have opportunities to make a change. And that's honestly how that workers' comp solution, the claimant solution, came to be. We had one of our customers come to us and say, hey, we're seeing this need. What can we do? And so we worked with them to help develop that solution. And now we've rolled it out to over 8 to 10 customers. So, you know, that's how it works.
Yeah. So there don't have to be areas that are stuck. I mean, I can certainly think of Liability Matters, D&O Matters, where, you know, it did go to court or it was mediated, and the proclamation that came down from whoever was in charge, you know, whether it's a judge or a mediator, you know, you will pay in this method delivered, you know, we would get like FedEx next day of a paper check kind of rulings.
Right.
And unfortunately, then our hands were tied for other options. But I feel like that's probably, a lot of those situations are gone now. So that maybe takes away those constraints of the presumption that, oh, that's, you know, that's B2B liability litigation stuff, so that's never going to get digitized. Well, the whole mediation's digital now, and everything else about it's digital, so why not? Doug, is that what you're finding
Right.
as well?
Yeah, I think you're dead on with that. It's funny that, you know, the evolution of payment, at least for, you know, we've got a bit of work to do, right? At least where I work, right? Because there's so many options, and there's legacy platforms and the technology to integrate them and all of that. But to your point, Bryan, yeah, the especially in those big cases, right? The amount of money that can transfer and the time it takes to wait for it, that's interest earning and things need to get paid, because so yeah, we've but wire transfers and all that stuff are hard and cumbersome for companies internally, and so these payment platforms are good options.
Yeah. And are you seeing pockets where beyond even payments, but digitization is still lagging behind, or you think that mentality that there's some safe place where you can work the way you worked 20 years ago is not really a fact today.
Yeah, I think most people, the digitization is taking place. You know, I always try to compare our personal lines care, you know, customers to our commercial lines customers, and a commercial lines customer is really interested in self-service. They're really interested in getting updated, but they don't really want to take the time to do it in person because they're busy doing other things. And so the more you can offer up platforms for them to check on their own status or to send them alerts with updates, or you know, the big thing we found in the whole self-service of the appraisal process was really big for commercial customers because they can't afford to have downtime with vehicles. And so whatever people are experiencing in their personal life with the flexibility to Venmo and to do all these other things, it has to play out in the commercial space of their insurance and their banking and everything else, right? So I don't know that there's too many. Even the court systems, you know, you mentioned me, I mean, court systems are figuring out how to go virtual and file things online and take birds. So all that stuff is by necessity now, but it was already starting, I think.
Yeah. Yeah. I mean, we do need to remember, just because it's a commercial policy, it doesn't mean the creatures that are living through it and buying, they're still people. They're still the same people who would have bought the personal lines policy. So their preferences and their offices are their homes now, and their kids are their coworkers or whatever. The lines are totally blurred. There's a question here about ROI, and this kicks off two different points that I wanted to dig into. That, apologies if they're tougher, but I think they're real things that we have to figure out. Is so this one's from the audience, and then I've got a follow-up one, but we'll start with this. Is what kind of ROI are you seeing from digitization? And specifically, they're saying digitization costs can be very high. And what they're not saying is sometimes the benefits case is a bit softer, or it's less explicit than, if we invest in this rating model, here's what we tweak in our rates, and this is what spits out. Or we, you know, print one fewer pages times all the pages that we're printing, here's what we save. It's less explicit. It's about customer lifetime value and NPS and things like that. So digitization costs can be high. Are you seeing the dollars saved from this effort, and where are you seeing the greatest returns? Doug, I'd love to hear your thoughts, and then Elisa, maybe specifically in the payment space, if there are areas where the digitization is paying off the most.
Yeah, there's a lot to that question. I just said that twice. You said you're going to do the hard ones, right? You know, it's you know, anytime we can remove a manual process and automate it, and you can think of the expenses, or you can think of an investment into getting better outcomes, right? And so we try to focus on those digitization efforts where we can get a 4 or 5 to 1 return on our investment, right? But some of the stuff you have to do is just infrastructure. You know, it's modernizing, and you have to bring some of those legacy processes forward and replace them, and then it's really hard to get an ROI, right? It's more of a competitive advantage because they lay the foundation for all the other stuff that you want to do. I mean, you know, the biggest, I harp on appraisal, but the digitization of the appraisal process, I think that was a big ROI, right? It's saving an expense. You can do more. You can let digital tools actually write estimates, and you can use video, you know, photo upload, and you don't have to go out and look at every single vehicle anymore. And so you need less people. You're able to do more with those people, and you can rely more on technology and in the digital space to do it. But there's other, you know, we have examples in the third party bodily injury space. You know, there's digital tools out there that help you evaluate your cases. There's digital, you know, partially digital tools that actually review medical records and, you know, organize your stuff. And I mean, digital files for someone that's been in claims a long time, the old paper I could do, it's not as easy in the digital world, right? And so enhancing some of those tools, trade efficiencies, and actually get you better consistent outcomes.
Yeah. So you give us a few examples on the payment side. Elisa, is there anything specific that stands out to you about areas where the ROI might be higher to focus on first, for example?
Well, I think just in general with payments, you know, the ROI that you're going to see really is going to come from your service provider payments, because when you're making the B2B payments to either service providers or vendors, and you have the option of providing them e-payments like virtual cards, that's where revenue sharing opportunities come in for the insurer. So you're going to see a financial benefit right away. But across the board, what you see is, again, you've got that single system of record, which many insurers right now don't have. They're writing off of different systems. And so you're streamlining those administrative and back office processes, which we know are saving our current customers, upwards of 250 to 300,000 a year. You can save man hours by streamlining those processes. And then you've got kind of the cost savings that come from working with a vendor that's running, like us, that's running a lot of payments through a platform that you realize in banking and treasury fees. So you're reducing your costs on one side, you're eliminating check, print, mail costs, you're reducing and streamlining your administrative costs. And then in the case of adding in the B2B payments on top of the B2C payments to policyholders, you're bringing in a revenue stream. So really, when you add all of that together, you can find that most people save $1 million plus a year by moving to digitizing their payments. And really the amount that you save, how you save it, depends upon what your swim lanes are. How do you want to go to business? What do you need?
Yeah, no, that's, I looked at, here comes the second question from me, which I think maybe one without an answer, but I think a lot of people on this call will identify with. I was in that situation. I was looking at payment solutions. This was still early days, like 2017, 2018. Electronic payments were happening, but I was in commercial lines and liability, and not where we naturally thought about this stuff in personal lines, for example. And I got into a situation where the CFO was interested in it too, but from a CFO standpoint, he was looking at what could our banking partner do? And, they're handling our ledger and our accounts. So whatever they're going to do, that's what I'm going to lean towards. From the customer experience standpoint, that's not that much better than what we're doing today. So I'm interested in, back to your point, Elisa, the options, right? I want to offer 5 or 6 payment options and not force them down into 1 or 2, which is where we're at right now. You can have a check or you can have a wire. So that didn't fit from a CX standpoint for my needs. And that we hadn't even gotten to the CIO, who might have had other needs and other considerations for what we could and couldn't integrate with, or what APIs would work with our claim system, not necessarily finance or vice versa. So here's the question, and Doug, I'm going to start this one with you. Could be a question with no answer, so don't worry if you have to push back. But when you get into these situations where each one of the functional stovepipes in the organization, no matter how integrated or siloed you are, each one might have a different goal or a different set of constraints. How do you see your way through that when the end customer experience might be, tied to only one of those specific outcomes, but we have politics, we have needs, we have constraints? How do you work through that to get something that's actually of value to the customer and moves that customer experience, rather than, oh, here we go, it's my insurance company again. It's not what I wish it was.
Yeah, so you're asking about how internally we sort through and identify how. Yeah, it's
have those competing pressures and constraints and desires.
Starts with a clear vision, right? And so you got to figure out what is the job to be done, what is the outcome you're trying to shoot for. And it's funny because insurance companies spend a lot of time in their silos, right? Treasury, and you got to get everybody in the same room. It's nice to have an enterprise focus on solving that issue, because that issue could exist at the point of sale too, right? Or reimbursement. I mean, there's probably, you try to find as many examples where everyone could benefit from the solution, and you get all of the people together to work together on it, right? I mean, it's in claims, it's hard sometimes because we're trying to drive to one thing, but if you can garner support where everyone can leverage it, it becomes an enterprise focus. And then all the enterprise resources can line up for it. But that's communication, collaboration, all of those buzzwords that we talk about.
Have you seen a shift on the back of 2020 or through 2020 in the customer experience mindset? Because in those three, you know, for me, it was two of us who had different views of how to solve for it. There is an answer that the end customer, the end insured, or the recipient of that money, if it's a third party, would be happiest with, that would move the needle on all the other pieces. But that didn't necessarily win out before. Are you seeing a change in the tone around the openness and the understanding that we have to be customer minded in those decisions?
Yes, I think so. Absolutely, because that's the competitive advantage, right? I think everybody recognizes that claims has an opportunity, or maybe the greatest opportunity, or the most opportunity to transform and modernize, and actually use these type of tools, because this is where, you know, that moment of truth and delivering that promise is essential. And you know, you raise a good point, because the wire transfers and the EFTs and all of the problems that exist with customer perception, and nobody wants to give us their bank account or routing number, but even if you go through, you have, you know, wire transfers and that whole authority and making sure that everyone, I mean, that's the challenge, right? And so if everybody's having an issue with what we have today, and everybody needs a newer solution, and it ultimately impacts the customer because the focus is on the customer, then it creates a really nice vision, right? And to get all parties together.
Yeah. But it's that vision, or that sense that the customers who we're trying to solve for, not this constraint we're living with over here.
Right. Yep.
Elisa, have you helped carriers kind of navigate those political waters and return the focus back onto the customer to make those decisions? What sort of struggles and solutions to those struggles have you seen?
Yeah, I mean, it's a very good question. That is something that, you know, we do probably in every particular sales effort that we have, right? We sit with customers, and oftentimes it depends on who brought the party to the table. Excuse me, like Doug said, it's really about defining that clear vision and then bringing the right people to the table to have the conversations. And I think, you know, the questions that always come back to us are how is this going to integrate into our claim system? How is this going to work for our adjusters? We need real-time access to understand what's going on. We don't want to give up control, so how do we trust you to do that? And then, of course, there's the CIO who's concerned about the drag it's going to make on their very, very few and limited resources. So I think that those change with every different prospect that we talk to, and every customer that we've talked to. But ultimately, it comes down to that vision, and that vision of doing something better for the customer, of finding ways to come across the different functional areas and come to the table and have a conversation and you know, and work together to get there to something better than what you had.
I think that's really well said, and I can imagine this is probably like 99% of the sales meetings are around making sure everyone gets it and is aligned, and probably breaking through some of those points of hesitation. The first question we got actually is a bit on that. So it's asking about the role of brokers and agents in this digital process. And I can think in particular of a client of mine who has wonderful agents who very much care about customer service, but they've been pretty insistent that for every claim payment, they want a paper check sent to the agent so the agent can deliver it to be the savior, right? To save that business in their terrible moments, a commercial lines carrier. And then COVID hits, and it takes now 2 weeks longer to get checks out because, you know, especially early days, only so many people can be in the building to print them, and then other people have to sign them, and then we're back. And unfortunately, that's one of the downsides. Doug, you were talking about the paper world where we can move files around. Meetings don't just suddenly stop when we're all together. The joys of some of the digital things that we face, but that's okay. We're resilient. We came back. I just wanted to bring it back to close things up. Apologies to anyone who lost us in the middle of what was getting to be quite a, not heated, but rich conversation. Elisa's just joining us back. But thank you to the both of you. That was a lot. We had a lot of great questions. I thought we tackled some very real ones, some difficult ones. And the reality is 2020 jump-started everything, set us on a course. There is still more work to do. When I hear carriers talk about, we did all this stuff last year, we're good now. No, my friends, the train has left the station. We have a sight into what we need to be doing, and it will speed up. We talk so much about payments, and Doug and I were just talking before we came back in. Payments is ultimately the final product of claims. It's not the end of the claim experience. It's not the only thing in the claim experience, but it's crucial to it. And as Elisa shared, it goes beyond payments to claimants to third parties. It's our vendors, it's our suppliers, it's how we receive money. These are things we can start to change. And the simplicity of moving money all throughout our lives is redefining what we as an industry have to do. Print a check at home. That's perhaps better, but that's not good enough. So we need to keep pushing that envelope. I want to thank Elisa and Doug for joining us today, and to all the attendees, fantastic questions. Please do watch your inbox. You will, of course, get a notification when this recording is available to you, but also you'll get a link to the white paper that I mentioned with some really fantastic insights, guidance, thoughts that should be sparking conversation on your end from Reuters Events and from VPay about payments in particular, but this digital push that is not ending. So with that, thank you again to Elisa and Doug, and have a great day, everyone.
Thank you.
Thanks, Bryan.